As a team, we all used to digitize banks, and then we tried to see how we could use this technology to make lives better for the vast majority of Ugandans and Africans who don't have access to banking services today and who don't get to reap the benefits of this technology. So the idea of creating intelligent, digital, AI-powered farmer financing was born. We tried to shop this around to the banks. The banks didn't really want it. They didn't understand it. They were very comfortable in continuing to do things the way that they were doing. And so ultimately, Emata was started.
This is Financial Inclusion Unlocked, an SIJ production.
Welcome to the Financial Inclusion Unlocked podcast. This is the last episode of our first series, and it's been such an honour to meet so many amazing experts and leaders across the world to share their stories, including our guests from Emata and Agri Evolve today. This show has been produced by SIJ Media, and our first series was kindly supported by the Swiss Capacity Building Facility. High up in Uganda's Rwenzori Mountains, some of the world's finest coffee can be found. Yet the very geography that makes this coffee special also creates immense challenges. Remote locations, difficult terrain, and limited infrastructure keeps farmers trapped in cycles of subsistence farming. But I met two organisations that are leveraging digital innovation to dare coffee farmers in the Rwenzori Mountains to dream big. Later in the show, we will hear from Kifula Collins at Agri Evolve. But first I speak with Lilian Nasanga-Musoke and Maren Hord-Bjorgum at Emata to learn how they have partnered with Agri Evolve and many other organisations to leverage village-based agents to provide AI-powered digital loans through WhatsApp to farmers in the country. Lilian is the Chief Product Officer and a co-founder of Emata. She shapes and decides the future of the product, including product visioning, user experience, and user research. Maren is a digital communicator, working as the Chief Communications Officer at Emata. In 2023, Emata was named the best newcomer in the world at the Global Startup Awards. But I wanted to go back to the start of the adventure, so I asked Lilian why they started the business.
The idea of Emata starts way back in 2017. Yes, Maren and I both have different sides of a story, but I'll start with mine. So when we started Emata, we were still working with another company that digitizes banks. Basically, what we build software for banks, both here in East Africa and in Scandinavia. And we thought to ourselves that this work that we are doing can actually be also very instrumental in transforming how we finance people here in our country, Uganda. But when we brought this idea to the banks that we were working with at that time, they were not as interested as we thought they should be. Of course, wanting to have an impact on our very own country, it was very frustrating. We decided to do it ourselves. And that's the birth of Emata in 2017 with our founder, Bram, coming into Uganda. He was appointed to be the MD of the company where we're working at, but also was on a mission to find out how we could actually do financing better in Uganda. And the birth of Emata started then. We had many ideas about this, but I think Maren will tell a better story at that.
I think Lilian is selling herself too short. First of all, she was calling Bram our founder. That's incorrect. The founding team is Bram, who is a Dutch national but who's been living in Uganda for a bit. It's Lilian. It's our CTO Dave, and then there's this data science wizard from Italy, Dario. And they all form the founding team of Emata. I think Lilian, other than that, told it very clearly. The one main thing that I think needs to come across is that as a team, we all used to digitize banks. We used to use really, really advanced technology to digitize banks in Europe and in East Africa. And then we tried to see how we could use this technology to make lives better for the vast majority of Ugandans and Africans who don't have access to banking services today and who don't get to reap the benefits of this technology. And so the idea of creating intelligent, digital, AI-powered farmer financing was born. But then, as Lilian mentioned, We tried to shop this around to the banks. The banks didn't really want it. They didn't understand it. They were very comfortable in continuing to do things the way that they were doing, servicing a vanishingly small part of the population, because it's very profitable. And so ultimately, Emata was started. Now we say 2017, but it was an idea for quite some time. Yes. The company was registered properly in COVID in 2020. We got our lending license in February 2021, and that's when we started actually going out there and giving out loans. So yes, I think that's the founding story.
Fantastic. And when we look at the landscape for smallholder farmers in Uganda, what is the current situation for farmer financing, and what problem are you trying to solve?
We are solving a huge problem, not just here in Uganda, but in Africa. To give you a picture, it's a $240 billion problem. Farmers are not getting the financing they need to make critical investments in their farms. Banks are not trying to do this simply because their processes are not designed to suit the way farmers work. The traditional bank processes require things like collateral security, which farmers cannot afford because usually this is land which is their livelihood. So what happens now is that farmers will then resort to borrowing money from informal money lenders who lend up to 20% a month. Basically, the investment is not the kind of investment that will help them grow or develop their farms. So what we do is to bring a product to them that works the way farmers work. We call ourselves the guys that are daring farmers to dream big. We do this by making sure that we use the way the seasons, the way the farmers work to design a product that works for them. How does that work in general? We start by making sure we understand that the farmers' deliveries over time. We digitize these farmers through agricultural organizations or partnerships with cooperatives, aggregators, processors, any of these organizations that actually work with farmers at scale. We digitize these partners, and based on the information that we have from them, that's what we use to run our AI-powered analytics to make sure we can actually tell how and forecast how these farmers will perform in the future. We couple that with weather data and are able to tell how the weather and different conditions will affect the future yield of the farmers. Once we know that, then we know exactly how much each farmer will borrow. So every farmer gets a tailored credit limit based on how they perform, based on how they've been performing over time. This has been very helpful because our models are rewarding farmers that are actually intentional about how they grow their farms and intentional about how they want to develop. So farmers that are more opportunistic or traders that just want to make a quick buck or a quick earning are not really rewarded by our model because our model traces the performance of farmers over time. We found that has been the key to us developing a system.
Okay, so Lillian, Maren, if I take you back to 2021, you've just got your lending license, and to be a fly on the wall in your office, how do you get this off the ground? You know, a fintech daring farmers to dream big, initially in Uganda with big plans for the continent. How do you go about the first pilot project, choosing your first partners to work with, you know, raising investment? I'd love to kind of hear some of the stories that went into that.
It's a very good question with many answers, but I think when you're a fintech startup in Uganda, as opposed to my native Norway or Silicon Valley for that matter, one of the first things you realize very quickly is that angel investment doesn't exist. right? Maybe on paper, but in reality it doesn't. So how we first started out was by grant funding. We had an idea, we wanted to test it out. We got a small grant from UNCDF to test out this thing we called farmer financing. We had a lot of ideas. To skip to the end of it, most of our ideas were really bad. We failed at a lot of the first things that we tried to do. So ultimately, we spent about two years on R&D trying to figure out how to solve this thing. Because ultimately, if farmer financing and farmer inclusion was easy, it wouldn't be the problem that it is, right? We needed to find a solution that worked. And so we were lucky to have grant funding that provided the safety net that we needed to develop it and fail. But then ultimately, once we knew what we had in mind, we knew that we had a model that could work. That's when Emata was actually properly founded. And that's when we started applying for a lending license. And that's when we started looking for equity funding. So in 2023, we raised our successful seed round with a number of very forward-thinking, I would call them Pan-African investors who very much understand the agricultural space and were willing to go into this journey with us. And we were lucky to have them, especially considering the investment climate these days. Things have really not been so good for most startups on the continent. After like this very flourishing era of Chipper and Flutterwave and all of these unicorns coming from West Africa especially, but also from East Africa, things have been quite frozen in our region for a while. And we were lucky enough to have investors that believed that what we were doing was worthwhile enough to invest in us.
Okay, no, super interesting. And, it's interesting to hear how that grant gave you the safety net to build out the R&D and fail, which is essential to find the right model. So I know in terms of how Emata form partnerships, you work with cooperatives, processors, exporters, and prefer to use this model rather than hiring your own network of agents and providing digital loans to individual farmers. So why did you decide to go through this model?
Well, ultimately, that was kind of the thing that we figured out while we were failing. So one of the hardest things to do in financial inclusion is last mile, right? Ultimately, in a digital world, we think, especially if you come from the Western world, that everyone is just in this technological network and everyone has access to the internet and everyone has a smartphone. And even when you listen to the way that some people talk about countries like Uganda, you get the impression that, yes, it's not very digital, but every farmer is walking around with a smartphone, which is both true and very, 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 very false. Ultimately, the way that the structure is these days is that people who live in Kampala, people who live in the cities have a smartphone. People who live in proper rural areas, like the coffee farmers that we work with in the Rwenzoris, for example, they have a feature phone. So how do you reach them? Ultimately, that became also the same question we asked about how do we credit score them. So Lilian talked about the fact that most of the farmers we work with don't actually have the collateral requirements a bank would normally look at. Now, our collateral, instead of being a land title, a guarantor, or your LC1 chairman, to use a very local example, is instead data. And how do we get that data? Now, our farmer in the village with his feature phone is not going to be able to give us any data at all. However, his cooperative or the coffee exporter that he provides coffee to will have plenty of data points about how much he delivers every season. And the more loyal that farmer is to that company or that cooperative, the more data they will have. And so what we decided was the easiest way to go about solving multiple issues, last mile issue, collateral issue, was instead of going directly to the farmer, we work with a company, a cooperative, someone who's in the middle, and then we digitize them, we invest our technology in them, and then we reach farmers at scale. So the way that this works, very simply, is that when we set up with a partner, we get their data, we digitize it. It can be anything from super fancy data points in SAP to paper ledgers with milk delivery scribbled in handwriting. Whichever one it is, we can work with it. We digitize it, and then we create credit scores using some AI magic, and then we lend out to farmers. And that's where the second part of your question comes in, agents. Ultimately, it would be very, very labor intensive and expensive for us to set up our own agent network. More importantly, though, it's not necessary, and it would be double work because most of the cooperatives and partners that we work with already have an agent network. And so instead of setting up competing structures, we tap into the existing ecosystems and then use that, because ultimately our partners, like for example, Agri Evolve, will have a huge network of agents working in the field. They're there with the farmers every day. They know them intimately. So plugging them into our system, because that person will have a smartphone, is a much more effective way of doing the last mile service distribution. So that, long and short, is the secret sauce of Emata.
So what was your first partner? Which value chain did you select, and how did you start getting this partnership off the ground?
Yes, so we started in dairy, which was at that time the most strategic choice, because as you may or may not know, in Uganda, dairy cooperatives are one of the most strongest organizations or social organizations we have in the rural areas. Farmers go there almost daily to deliver their milk. So we knew that at this point, if we were going to get this kind of data about how farmers deliver daily and create a record of farmers' harvest or farmers' deliveries over time, the best way was to get a daily record of their deliveries. So we started in central Uganda at the cooperatives that were in central Uganda. Two of them, one of them now is one of our biggest partners. They're phenomenal partners. Now we've seen them grow by miles since. We started in dairy, and then later on started introducing more value chains as we kept on learning. So our model right now is that every time we introduce a new value chain, we learn afresh. We've also discovered that farmers in the different value chains also act differently, and the data also is different. So yeah, we started in dairy to make sure that we can actually test quickly, because dairy had more data points.
I guess at a point that we just discussed around working with local partners, I guess you have the element of trust involved. So for the dairy cooperative that you initially piloted this model with, just from my own experience of seeing the levels of trust that smallholder farmers place in financial institutions, how did you manage this and leverage on the trust that the dairy cooperative have with their membership base?
I'm going to start by saying something controversial, but Lillian and I are already laughing. I come from a very high trust society, right? Uganda is probably one of the most low trust societies in the world. So ultimately, I think one of the experiences we have, though, is that there is not so much trust as there is inbuilt accountability. So in the case of a cooperative, they are close to the source. The farmers know them intimately. They know where they live, like the board or the manager of the cooperative. So ultimately, we're tapping into a structure that is closer, and so the social structure that is closer. So accountability is easier. Exactly for that reason, because ultimately, in a low trust society, people will try to screw each other over. And most farmers will not trust banks to give them money, follow the procedures that they say that they will. More importantly, if we get into other products we have, like insurance, when we give out insurance, most farmers don't believe that they will actually get a payout from insurance, even from a licensed, regulated, multinational insurance company, because that trust is so low. So what we achieve by working locally is not so much tapping into a system of trust, but rather I would call it a system of accountability, where people can see and feel what it is that they're working with, as opposed to it being an app on a phone.
Maren makes a good point there, but I'll also speak to the social construct. Most of these cooperatives are actually founded by the farmers themselves. So they elect a board, they elect the people in society that they know have the influence to actually command or make decisions for the farmers' good. So that's where it comes from. And once you get that board to see the advantages that they bring to their farmers through Emata, you actually got the farmers on board as well. The second thing is that we've seen that for most of these cooperatives, they're actually looking into solving this problem because they are already facing issues with farmers' side selling their milk. So where farmers get a bit opportunistic because of the social or the financial pressure they have, they tend to get the temptation to sell to other providers or traders or people that will give them quick cash. So when we come on board, this board already knows that they have an extended service they can give to their farmers to help bridge that gap, that money gap that farmers have. So we've seen that because we are sort of now empowering the board to do more for their farmers, they are more willing to talk to farmers about working with us and being able to grow the different products alongside us because of that extended service we're able to give them. Yeah. I think those are the three things that we think are creating for us, not really a trust as such, but a way, it's more of a partnership that works.
How does this work in practice for an individual farmer? So if they want to request a loan, what is the process? What are the steps that they need to take, whether they need to engage with an agent in their village or with the cooperative?
Let me take it one step back, because I think also for farmers, that step before registering is important. So for a farmer to qualify for a loan, they have to have delivered milk to a dairy cooperative or crops to a crop cooperative or partner for a minimum of, in dairy, 6 months, in crops 2 seasons. So there is a requirement of loyalty. Now, for the partner, that means loyalty. For us, that means data quality. Once this is done, you are pre-approved for credit. Then what the farmer will do is usually they'll receive an SMS, which is the easiest way for us to communicate directly with farmers at scale. And that SMS will have an information about their credit limit, the interest rate, and where to go to get their loan. So their cooperative or whoever it is that we partner with. They will then go to the cooperative, or they will go to the buying center in the case of a lot of the coffee partners we have, and they will meet with the agent that they work closest with. And the agent will have a chatbot on their WhatsApp. WhatsApp, because it is by far the most used social media in Uganda. So ultimately, when I said a bit earlier that we failed a lot, we like all tech startups, when we started, we wanted to build an app because everyone has we built an app because everyone has a smartphone, we thought. Now we found, and this is very critical for anyone listening who is wanting to solve things with technology, we found that yes, absolutely, everyone in the village who can afford to will have a smartphone, but they will have a techno smartphone, and that smartphone does not have the storage capacity of your brand new iPhone. It will have teeny tiny speck of dust storage capacity. So if you ask a cooperative manager or a buying agent to download an app on your phone, you will find that they will do it, And then the next time you come and meet them, they've deleted the app because they needed space for messages, Facebook, TikTok, some video. But the one app that they will never delete is WhatsApp, because everything happens on WhatsApp. So for us, we scrapped our app, which was very sad. It was a beautiful app. And then we built a WhatsApp chatbot instead. So what happens then is the agent will register the farmer if it's the first time the farmer is applying for a loan. It's a very simple KYC where they take a photo of the farmer, they take a photo of the farmer's national ID, and they take a photo of a signed loan agreement that the farmer signs. Once this is done, they apply for the loan also using WhatsApp, which goes into our digital system and gets processed within a few seconds. And then the money gets paid out to the farmer's mobile money account. All of this combined, if it's the first time and there's registration and all of it, should take roughly 5 minutes. If it's only the loan application, we've timed it a few times, we've had some competitions, it takes about 45 seconds. Yeah. So that's how it is. One important thing to note from a financial inclusion point of view, and it's very important for us, is when a farmer comes to take up a loan, we send out an SMS before they approve the loan, where it has all of the information about the loan. Now, when I say all of the information, I mean all of the information. It will have the loan amount, it will have the interest in percentage, it will have the interest calculated in money, because we know that calculating interest is for people who had very good grades in math. And so ultimately, they'll have a very, very, very good understanding of exactly how much it is that they're supposed to pay back.
So 45 seconds is pretty incredible, right? If we look at the tech behind this, we're coming to the end of the first series of this show, and we have spoken a lot about apps and app fatigue in many areas, and the kind of growing importance of WhatsApp. So a question for Lillian, in terms of innovating in low tech environments, how important is that, and also to take into consideration even the digital literacy levels of the agents of cooperatives and your agri partners that you work with?
The importance of digitization is basically for us to make sure that we can bring the product as low cost as possible. We can keep it as low cost as possible, but we cannot leave out the human element in a low tech environment. So even though we are making a process that's complex to be as small as 45 seconds or minutes in terms of if you're doing registration, we also couple that by actually doing some trainings. We call them info sessions with the agents. We do spend some time with the agents to take them through digital literacy, financial literacy, basics about loans and how they work, how repayments should be done. And we've seen that they have welcomed this. We actually do certify them and give them a certificate, and we see that most of the agents are proud of actually being called a certified Emata agent. But in addition to that, for the farmers, we also do this same info session with them to introduce the product, answer as many questions as they can, to just remove that fear of technology, but also establish an understanding of the product. The second thing we do, aside from the information we give them about their loan, we convert their loan in terms of things that they understand. We will tell them that if you're taking this loan, you will need to deliver these many kilograms of coffee to repay the loan, or you will need to deliver these many liters of milk to make sure you can pay your loan comfortably. And we've seen that a light bulb goes off in their mind at that point. They're already planning how much they need to do to make sure to deliver that coffee and also have extra to take care of their family. So that's how we create that change management between no tech at all and then introducing a very high-tech solution, but not take away that relationship they've had with their agents or the agri partners that they've been working with, and not take away from them the understanding of their farm being a business that is able to finance not just not just taking care of their family, but also finance the farm to make critical investments and to make developments that will take their farm from just a subsistence or care for your family farm to an actual business that makes them bigger.
From the couple of years that you've been lending, how many farmers are you now reaching through your partnership base? How many partners are you working with, and what are the repayment rates looking like?
Bram is going to love me for being the one who's asked about numbers, but no, jokes aside, since we started in 2021, we've given out about 7,000 loans. We have digitized about 30,000 farmers, of whom about 17,000 have been offered credit limits. So just to break down what that number actually means, we are, despite being a startup, a bit conservative, which is not something you should be saying out loud, but we try and maintain our risk where we know it's manageable so we can grow and not burn out. So whenever we start with a new partner, what we'll try to do is run a pilot that is manageable in size to make sure that on the partner level, not on the farmer level, we actually trust farmers quite a lot, but on the partner level, we trust the cooperative or agri partner that we work with, because ultimately a good or bad partnership will make or break the model. So sometimes people, especially here in Uganda, where we're gaining a bit of traction and people kind of know who we are, when I say, oh, we've only given out 7,000 loans, they're like, oh, we thought you were at 100,000 by this point, because you're so well known in the farming community. But it is because we're trying to make sure that what we have actually works. And then when I give you the other numbers, I think we've proven that we are correct. So on the flip side of this, our repayment rate stands at 95%. So we are actually kind of doing the impossible. We know the default rates in the banks because we worked with all of them, and they're not even comparable. And so ultimately, I think we've really managed to, with the growth that we've had so far, develop something that stands the test of the strain of working last mile. And ultimately, that's also why we're now very excited to scale this up properly, because we feel like we've figured it out. Our models seem as airtight as a financial model can ever be, which is, always a bit fluid. And ultimately, we think we have exactly the model needed for at least the core markets we work in, which is dairy, coffee, cocoa, oilseeds, potatoes.
Now let's go to the Rwenzori Mountains in western Uganda, a lush, high-altitude region often called the Mountains of the Moon. Here, coffee farming isn't just a livelihood, it's a way of life. In this region, Agri Evolve, a purpose-driven social enterprise, works closely with thousands of smallholder farmers to improve productivity, enhance crop quality, and open up better market access, especially for Arabica coffee. As we mentioned earlier, Agri Evolve has partnered with Emata to offer digital agricultural loans, helping farmers invest in their businesses with faster, more accessible finance. To give us a first-hand view of what this partnership looks like on the ground, I spoke with Kifula Collins, a field coordinator at Agri Evolve based in the Rwenzoris, who told me about some of the changes he has seen in the farmers that he works with. Here's Collins.
Farmers are able to get loans, cash, and be able to buy agri-inputs like fertilizer and other tools to be used at the farm. And this has increased their production, which leads to them getting more money as they get better standards of living. Farmers now have avoided unnecessary loans from the middlemen who always take ownership of the coffee farms and just strip the coffee and pick green beans, which will always affect the quality of the coffee. This habit was very high before the partnership, and when Emata came in, farmers were able to be given loans whereby nowadays they leave the green coffee on until it turns red because they can have gotten money to use before. And this has improved the quality of the coffee because they only pick red cherries, which bring a very good quality. Agri Evolve farmers now are able to have their coffee farms insured due to the Emata loans that they receive. So here the calamities of the hailstorm, landslides are able to be avoided. In case it happens, the farmers are able to be returned their money and they don't feel the loss. Another reason why the partnership of Emata and Agri Evolve is important is that it has improved the traceability of coffee, whereby it is an incentive for the agri-partners to know where the coffee comes from the farmers. And this helps even the farmers' credit limit to improve, whereby the more the coffee the farmer brings, the more the credit limit.
This episode is supported by SCBF. If you're a fintech, inclusive insurance provider, or social enterprise expanding financial access in low-income markets, SCBF offers a unique opportunity: repayable grants. These grants are designed for impact enterprises that are commercially strong or on track to become so in the mid to long term. Ideal candidates have moved past the pilot stage with a proven product, established customer base, and a clear growth potential. A great example, Emata, the focus of today's episode. SCBF's repayable grant is helping Emata scale their operations in Uganda and expand into Tanzania. As part of the initiative, Emata will onboard new partners, collaborate with at least 5 agribusinesses, reach 25,000 farmers, and provide 2,000 tailored loans, driving both agricultural productivity and financial inclusion. To learn more about SCBF's repayable grants and whether your organisation may be eligible, visit scbf.ch/repayable-grant. So we've just heard about how SCBF is supporting Emata in expanding your operations and also piloting in Tanzania. So I'm really curious to learn what else is next for the business as you continue to expand.
Yeah, no, we're super excited about this, actually. Tanzania has always been a goal for us. It's our neighboring country, and it's a huge country agriculturally, but with a lot of potential. So in Tanzania, we'll be starting up in dairy and coffee, which is quite obvious as they are our key markets, and we also see a huge similarity in how the industry works in Tanzania versus Uganda. So that's where we are working now, and we're very grateful that we have partners on board that are really supporting our growth on that end. We are also looking at Ethiopia. We are starting up not in coffee, which is shocking, right? Ethiopia, the birthplace of Arabica. But for now, we are looking to expand into the dairy sector in Ethiopia, which is substantial. And we're very excited to get started there with all of them. And I think this is also a very, very interesting part of where we're moving. Up until this moment, we have always been lending out our own capital. So we have a very generous lending facility from the Dutch embassy in Uganda, who very much believes in our mission and who has funded our lending so far. So all of our capital comes from them. But then as we go into other countries, we are exploring a model that we've built for multinationals or bigger enterprise clients, where instead of lending out our own money, we lend out their capital. So big coffee companies, for example, who have a lot of money, who've been trying to do cash advances to their farmers before because they realize the critical part that side selling plays into their sustainability as companies. And so ultimately what we're trying to do for them is come in and take that money that they've already set aside to invest in their farmers and do it for them. Because ultimately, without sounding too American, we are much better at it than they are. So ultimately, what we're trying to do is take that burden off of their hands, allow them to be very good at what they do, which is to have agronomers help those farmers grow and then ultimately buy the coffee, for example, and export it. And then we come in and we solve that little step in between, which is farmer financing.
So that's almost like lending as a service, or so you come in and your kind of value proposition lies in the digitization of the MIS and also the chatbot and the SMS.
Absolutely. Now, of course, all of our services, and it's a good reminder actually, because we have a few different things, and you don't have to use all the services we have, right? So our product suite exists of our MIS, which is primarily for smaller companies. So companies that can't afford the bigger systems need a free system, because we offer it for free, to manage their operations. Then we have the chatbot, which we obviously use for both loan origination, as it's called, and KYC. Then we also have our digital payments, which is something that we've been rolling out this year, ultimately to help companies pay their farmers with less administrative clutter. So what it does is essentially allow you to run all your systems through our system and pay out in mobile money all your payouts to farmers for example, your coffee. Then we also have insurance, which I mentioned briefly earlier. What our insurance does, and I think our insurance is super, super important when we talk about financial inclusion, is that it gives farmers a safety net, especially if they're in a high-risk area. So we don't offer our insurance everywhere. We tend to offer it in high-risk crops and high-risk areas. So high-risk crops would be tomatoes or potatoes. High-risk areas would be previously mentioned Agri Evolve farmers in Rwenzori, where you have hail and you have landslides and you have droughts and you have a lot of weather and a lot of climate change. Ultimately, this is a first of its kind, actually, insurance product. We call it a hybrid weather insurance. We've collaborated with a company called AIC, which is a consortium of all the insurance companies in Uganda. What's new about it and interesting is that they use our yield projections, which we create using our AI algorithms, and then they insure based on that. So if the farmer has a calamity of any sort, the insurance does not just cover the loan, it covers whatever loss they have from their yield projection. So ultimately, at the end of the season, if they've had a loss, say they've had a drought and they lost 70% of their yield, not only will they get enough money to pay back the loan, but they'll also get an additional payout because the yield will usually be significantly higher than our credit limit. So in order to avoid financial ruin, this insurance is so incredibly important, and I think it's one of the most important things we've added.
I think so. We've covered insurance quite a bit in the show, and it's quite interesting to see how AIC are underwriting using the data that you have on yield. This has been a really, really fascinating discussion, and looking forward to seeing what's next for Emata. I guess a final question is around the topic of financial inclusion. What does this mean to both of you, also to the company, and how does financial inclusion drive your work?
So for me, growing up, we were brought up by parents who depended heavily on their farms to put us through education, to put us through many things. And at that time, and to find out that not so many of people like them can get the financing they need to grow these very fundamental parts of their lives, their businesses or their farms, is appalling. And I think that's where, for me personally, the passion comes from. How can we solve this for people like them, for people whose businesses are not the conventional ones that many people are interested in, the ones that have the trial balance and all these books? How can we create data points and create ways that we can determine and value their businesses in the way that they get all the financing that they need to grow and become even more able to not just feed the country, but feed a continent that is ever more needed to grow their food supply. So what we are doing now is to look into not just things that help them, let's say, get loans, but things that involve transforming these farmers from just people on a farm into entrepreneurs, into people who can look at their farm and project how big they can grow. So as Maureen said, we are looking bigger. We are looking into helping multinationals because these are driving a lot of the farmers' income in this country. We're looking into insurance. How can we create resilience so that they don't lose everything in one season and have to start from scratch? We're looking into, later on, we might even looking into savings, because we know school fees is a big thing for them. So there's a lot of things we're thinking about to make sure that we can actually bring in as many farmers as possible, and many of the different value chains and industries that are connected to these farmers. So things like input providers, that's something we're also looking into. Things like enabling these different middlemen like traders be able to buy the coffee in time, or the different produce in time.
Yeah. So as a white person in Africa, it's always a bit awkward to talk about inclusion without sounding paternalistic. But I will say I've lived in Uganda now for about 6 years. I met Lillian in Norway, actually, when Lillian was working in Norway for banks that side. And I think one of the things that motivated me to go to Uganda, and one of the things that motivates me still, is that ultimately, the people that I met from this country were never the destitute people that you saw in aid commercials. They were as smart or smarter than I am, as driven or more driven than I am. But ultimately, unlike me, who comes from one of the richest countries on the planet, with one of the best welfare systems on the planet, they're left on their own. And ultimately, where they go to in life is mostly due to how much they manage to drag themselves up by their bootstraps and get there. And for a lot of people, that also means defrauding the system in the process of enriching yourself. And what I love about what we're doing is essentially that we're trying to create a different way for people to build their fortunes, a different way for people to take their kids to school, to get the education that was so easy for me and so available for me, and make something out of it. Then, as a final note, on a very much more personal note, I cannot survive in life without cappuccino. Coffee is having huge issues across the world in terms of its growing potential, and Uganda is both the birthplace of Robusta and a very, very key area for growing coffee. So I am very personally invested in ensuring that we will continue to grow high-quality Arabica so that I can get up in the morning and actually do some work. So yeah.
So you get your morning cappuccino. I really see where this is going, and again, we've talked quite a lot on this show about financial inclusion. It doesn't just stop at access to finance, right? Financial inclusion on its own is not necessarily impact. It's a vehicle for other interventions, right? For enabling more change, like resilience, as you mentioned. So I'm looking forward to following this journey. I'm sure our listeners are as well. Lillian, Maren, thanks so much for joining me on the show.
Thank you so much, Jack.
Thank you, Jack.
So that's it. This was the very last episode of the first series of the Financial Inclusion Podcast. I've certainly enjoyed it, and I hope you found it valuable too. You can check out the rest of our episodes that are available now, covering topics from parametric insurance to payments, digital financial literacy, and so much more. And you can also head to our LinkedIn channel at SIJ Media, where we have daily posts covering highlights and reflections on each episode. And make sure to subscribe or follow on your favourite platform so you will be the first to know about the release of Series 2, which, by the way, is coming later this year. A special thank you to the Swiss Capacity Building Facility for partnering with us on this first series. You can learn more about how they are innovating inclusive finance and how you or your organisation can support their work to fund more transformative projects at www.scbf.ch. I'll see you all very soon.